If you feel like you haven't paid yourself at all since starting your business, then you probably haven't. And here's how you can without breaking the bank. Because I know that's probably the number one thing you're thinking about is, I cannot afford to pay myself because there is not enough money in my business to grow. So I've just done a video on how to increase your prices. So go watch that and then come back to this. Or don't, just stay here. So one of the first things I always recommend for clients is, if you're starting a business, it doesn't matter what stage you're in, if you have been operating out of one bank account for the entire time, then that's a huge issue. And that is probably one of the reasons why you haven't felt like you've paid yourself at all. So what I'm going to get you to do is, I want you to get 3 bank accounts. The first one is going to be your business transaction account. The second one is going to be your tax savings account. And then the third one is your personal account. So your third one you probably already have because you've probably got a personal account already. But I want you to start thinking of your business as a legitimate business, because it is. So anything that's coming in and out of that business transaction account should all be for business. Then what I want you to do is, if you've got $1,000 that comes into that account, I normally recommend working off a percentage, because I find personally percentages just work better. It's a little easier for me to be able to divvy up exactly what the business has left and what I can keep. So for example, if tax is 30%, you're going to put tax at 30% in that savings account, straight from the income that you've received. Then you might go, hey, I'm going to pay myself 20% or 25% or 30%. Whatever the rate is that you have decided on, that goes into the personal account. So you might work on this on an invoice basis. You might work this on a weekly basis. A weekly basis might work better for you. So just figure out what it is at the end of the week, how much you've made and how much you're paying yourself. But having this separation is absolutely vital, because you're going to start to see exactly how much you are paying yourself in your business. And if it's not much, then we've got to go back to pricing. Biggest thing with your salary should be that you can live off that wage. So if you are not paying yourself on a livable wage, your business is not providing what you think it's providing. So if we're going to work off the percentages, I want you to think 30% your wage, 30% tax, and then 40% is left for the operating costs, any reinvestments that you want within your business. Work off the framework of percentages until you get yourself into a routine and a rhythm of what you actually need for your personal expenses and what you actually need to keep in your business account. So now that you've got your separation of your accounts, you've got your business transaction account, you've got some money sitting in there, and you're thinking, okay, do I need to reinvest this? How do I grow my business? What do I need to do? Take a look. Before you start thinking about reinvesting, I want you to think about, what is the baseline that it costs for you to run your business? Because if you start dipping into that baseline, you're going to have some cash flow issues. Cash flow issues are something that we want to avoid. Let's say it costs you $10,000 a month to run your business. That's all your expenses, all your insurances, everything. It's $10,000 a month at a minimum. That becomes your zero. So anything below that means that you are below baseline. You need to recoup and have that as your bare minimum. Once your savings goes above that, that's when you can start to look at, all right, how am I going to grow this business? What am I going to reinvest in? And reinvestment is exactly that. Reinvestment is pretty much looking into an asset. And that asset might be in people, or that asset might be in equipment. So what is the return that asset is going to be able to provide for you now and into the future? A lot of the time people think that they're going to go out and buy a car and that is an asset in the business. I personally don't believe that to be the case, because a car is something that depreciates over time but provides no extra value. It doesn't have any tie, in my opinion, depending on the industry, of being able to generate more income from that vehicle. I'm not saying that not having a car is not going to be of value, especially if you need to go out on site to jobs. However, there is this misconception that buying a vehicle and having a company car, having a business car, is going to bring some form of value into the business, when 9 times out of 10, it doesn't. But if you are a tradie that has a ute, that has everything decked out on that tray for you to go out and do a job, then that vehicle is an asset. You know why? Because you don't have to physically go out and do the job for it. You can put someone in that car that's trained and skilled to do that job. So there's a return on investment, because someone's able to do work from that vehicle with the tools and everything on the back of it. All of this is dependent on the industry. So if you've gone out and bought a car and you've gone out and bought a Mercedes, what value is that bringing into your company for it to be better? And I know if we're talking about having a premium brand, I need to be associated associated to Mercedes. Is a $200,000 vehicle really going to give you $200,000 plus in income? That's what I need you to think about. What is the actual return on investment when you are putting money from your business to grow? That's not going to help you grow. That's going to hinder your growth. What you want, especially if you're in the infancy stages of your business, is vehicles, not just cars, but vehicles, assets that are going to help you move forward without going backwards. So you've spent $10,000, but that's made you 50. That's what we want to see. That's what return on investment is. So the way that you're going to pay yourself properly is by setting up the systems so that you know exactly where your money is going and how it's moving. Having an emergency and savings buffer for your business, and then knowing how you're going to reinvest that money. You need to stop putting yourself last when it comes to your business. It's like parenthood. We always seem to put our kids first before us, but for us to be the best that we can be, we do need to put ourselves first. Otherwise, everything else is going to fall to shit. So make sure that you are compensating yourself correctly, because your business will have a much better chance of survival if you do. If you like this video, please hit the like button, subscribe, and if there's anything that you want me to cover, please put it in the comments below, because I'm here to help you.